Hey everybody, we are now moving into week 3, so you're already 25% done with the class, amazingly. And the key thing with this week is on Friday the 5th, you have a test. Your first unit test, if you will, is due by 11:59. What that means is it's a hard stop at 11:59 if you're in D12 taking the test. And 11:59 rolls around, it will shut you down no matter where you are on the test. So get it done well before then for your own benefit, okay? This week we're going to cover chapters 6, 7, and 8, and then give you a little time to prepare for that test. I'll put out an announcement about the test in the next day or two, and it gives a pretty good idea of what to expect. But if you've been keeping up with the homework and keeping up with the reading, you should be in pretty good shape to take the test. Okay, so let's talk about what's coming up this week, what we're actually going to cover. So this is basically a section of the course called Working Capital Management. What goes into it, that's what chapters 6, 7, and 8 are all about. Excuse me. And so really what it comes down to is when we talk about working capital management, we're talking about how we deal with short-term assets. So working capital management and how the decisions we make in terms of covering the financing to make that all work out is covered in chapter 6. And you want to be able to explain how working capital management involves financing and controlling the current assets of the firm. We want to make sure that we understand that current assets are those that are easily converted to cash, and those compared to those that are more permanent. So we're going to borrow a little bit from our accounting information that we generated in chapter 2. We're going to recognize the financing of an asset should be tied to how long the asset is likely to be on the balance sheet. So that's an important consideration when we think about how we're going to actually finance that. We explain why long-term financing is usually more expensive than short-term financing based on a real basic theory, but a very important one, which is called the term structure of interest rates. Read through that carefully. It will make a lot of sense when you read it, but it's a really, really important financial concept. Always we have to consider that risk as well as profitability determine the financing plan for current assets. Small businesses, as just kind of a side note to it, small growing businesses, startups, those types of things. It's a tough road, to make sure that you're financed, especially in the short term, well. And it's not easy to do. I can tell you that just from personal experience. So, but it is ultra critical that you have a working plan that makes sense. And illustrate why expected value analysis may sometimes be employed in working capital management as well. That's an interesting and an important topic to cover. So that's chapter 6. Let's move on to chapter 7, where we will talk about current asset management. And so in chapter 7, you're going to cover that current asset management involves the management of cash, basically, marketable securities, accounts receivable, and inventory. Interestingly enough, cash, if you're a big enough company, cash can be problematic. You don't want too much cash, right? So believe me, Apple on their balance sheet has a lot of cash. As an investor in Apple, I'm not really thrilled that they have that much cash. I'd rather see them deploy that into the next iPhone or the next development that they come along with that's really going to truly increase the value of the company. Thought of another way, as an investor, I can make cash investments myself, maybe not quite as good as Apple can, but probably not that different. So I'm really not interested in the firm having too much cash on hand. If you're a small firm, it's the opposite. Cash is your blood, and that's very, very important that you manage that well. So cash, marketable securities, accounts receivable, and inventory are all current assets. We're going to talk about cash management, as I just mentioned. We're going to talk about the management of marketable securities. We're going to talk about the requirements of accounts receivable management. This is an important thing. Now think about somebody like Walmart who has just an enormous amount of I skipped ahead one. But accounts receivables are, again, a very important part of if you, particularly in business-to-business sales, you're almost always selling on terms. So you're taking advantage of that if you're being billed that way and you are offering it, and your accounts receivables are really important that you manage as well. Okay, so but what I jumped ahead a little bit ahead of myself there, but inventory levels are really, really important, and they enhance sales and profitability. Now think about it, like I said, think about a company like Walmart, who's huge, and they have a huge, huge amount of inventory, even though they manage their inventory extraordinarily well. It's one of their key advantages in the marketplace. So, it's a very, very important asset that they are managing. Understand that the less liquid that an asset is, the higher the required return. So those are all things that come into consideration when we talk about current asset management, and it's a very, very important part of financial management in most organizations. Okay, so then wrapping it up with Chapter 8, we're going to talk about some of the sources of short-term financing. Trade credit is a really important one. We were just talking about that when we were talking a little bit about the credit from suppliers is really important part of short-term financing. And again, the larger the firm, you can appreciate the actual scale of this is huge, right? So recall that bank loans are usually short-term and should be paid off from funds from the normal operations of the firm. That's ideally the way you want it to be. Obviously, if you're a small startup firm and you're growing rapidly, it may not work out that way, not at first anyway. You want to get it to that point. It is a worthy goal from a finance standpoint. We're going to talk about commercial paper, which is what the largest firms use to borrow money on a short-term basis. We're going to talk about accounts receivable and inventory as collateral for a loan, which very much is a very common practice in the firm, and that if they do this, may then allow a firm to borrow larger amounts. And then we're going to take a quick look at something called hedging, which is just a way for us to play in the futures of things as opposed to what they are in the present. Okay, so that's a lot to cover, I know, and again, it's another tough week. Plus you have the test. So give yourself a chance to prepare for it. Give yourself a chance to be prepared for it. It's as with any of our exams, it's important to know that it's open book. You can use this book here, the e-text. You can use your notes. You just can't use outside sources. You can't go to other websites, and you can't use your phone or other things like that. So just keep those things in mind as you do this. I can honest to goodness tell you, you don't have enough time to look up every answer, so be as prepared as you possibly can. I've taken good notes as you read through the chapters. I think that's a really, really helpful thing to do that will help you, basically utilize the resources that you have to take the test as well as you possibly can. Don't hesitate to reach out to me if you have any questions, if you're confused about anything. But that's where we're at, and I wish you the very best of luck. I'm sorry, I knew I was forgetting one thing. I do want to mention that you have to have taken test number 1 and signed up for Honor Lock to take this test number 2, our first unit test. So make sure you do that before you attempt the test. You will not be able to take it if you did not complete test number 1. Just fair warning, so you don't have to factor that into the time it takes for you to get your test done. Okay, I wish you the very best of luck. If you have any questions, don't hesitate to reach out and let me know. Thank you. Best of luck.